job costing, day 2. All right, that's a backup stream there. Just make sure the volume, right, so I see the volume for that one. Oh, hold on, wait, this one's a little too high. Yeah, I forgot I was wearing a green jersey, so it's literally looking like a floating head. Okay, cool. So let's get back to the work. All right, so not seeing Jaleo, Jonica, or the other Joshua, so I guess, well, they'll have to watch your replay. Okay, coll. All right, so what, so I did a couple of questions for you all to try on your own. The 2015, right, as you can see, materials plus labor. In this case, we had other direct expenses, which we had to include. And then, of course, we had the overhead, which we found the overhead rate and we multiplied. All right, 2017, we had Payton. Again, basically same thing, materials plus labor plus overheads. And in this case, we had to divide by the number of units, right? The added little thing here was we had to add up all the overheads and divide by the direct labor hours to get the OAR or the POHR. And in 2018, we had it for 2 goods, right? So estimated overheads, estimated cost driver volume, and we had the OAR for each item, apparently, right? From there, we took that and multiplied by the cost driver volume to find the overheads applied, and then we simply included those items in the total calculation of job number 748, right? Okay, so now in 2019, hold on, what did I do? Okay, cool. Right, so for this one, let's see if we could zoom in a bit more. Right, now, okay, let me open the, what you call it? I'll open the past paper question, the PDF, right? But I think I cut and paste those pieces from the question because, yeah, it was kind of all over the place and it was hard to kind of fit. Right? Okay, so this is kind of like a warm-up question, which we will kind of do together, and then we'll get into some other things, right, related to job costing. So Lucas Limited decided to respond to a request for proposal, RFP, recently published in the media for the supply of product 427. The accountant gathered the following data pertinent to the preparation of a competitive bid. Okay, hold on, sorry, give me 1 sec. I'm not sure what's going on here. Live chat has popped out, really? Did it? I don't recall doing that. So pop back in. Okay, I don't know what's going on there. Right. So we have materials. Let's zoom in a little bit more. Let's get a 200 going, right? I think that's a little better. Yeah, that looks a lot clearer on my screen here too. So direct materials, 50,000. Direct labor, 1,500 hours is 35,000. So if we wanted to, we could find the labor rate, as in take the total direct labor cost and divide by the number of hours. But that may not be necessary. It's just something that occurs to me. Now we have orders, inspections, machine hours, and kilowatt hours, right? So this was actually a setup to ABC, but I repurposed it for job costing, all right? So let's take a look. So we have 4 items of overhead. These are their costs, and these are the numbers of each, all right? Now it says traditionally the company uses, okay, sorry, I was trying to highlight so it would be easier to follow. Right, traditionally the company uses, a predetermined overhead rate based on machine hours to apply overhead. So if it uses machine hours, that kind of implies that it is a capital intensive production environment as opposed to a labor intensive production environment. It implies, we don't know, we're just kind of inferring from the information given to us. In the previous questions, most of those questions used direct labor hours as the application base, the cost driver, which implied in those cases that whoever was doing the costing system determined or decided that, hey, these production environments are definitely labor intensive. So it makes more sense to use that as in direct labor hours as the cost driver. Oh, here's Julia. Okay, cool. Hey, good morning, Julia. How are you doing? Good to have you on. All right. Yeah, so we did a bit of a recap and we're just now talking through the first question for the day. So you haven't really missed that much. This is the 2019 question, right? Yeah, I have to go and browse through and see the last 4 years. So obviously we know there was no exam in 2020, no paper 2, there was paper 1 because of COVID, right? That's a whole 5 years ago. Wow. Wait, you all, so, no, you all would have already been in secondary school. Sorry, yeah. It's the current Form 5s would have been the ones who would now sit in the exam to go into secondary school. All right, okay, so the company has 4 categories of overheads as follows, right? So we said we have these things here. So what we'll do is we'll add up all of these costs, right, to get total overheads. And then we have to divide by machine hours. All right, now, so what, we're not going to answer the requirements, right? Sorry, yeah, we actually are. We are going to do specifically item B. We're going to come back and do item C next week when we are doing absorption costing. I'm sorry, activity-based costing. Sorry, this is absorption costing. All right. And yeah, but actually, no, absorption and marginal costing is a whole separate subtopic in the same module, which we're going to finish with, which I actually really like that topic, and I've messed it up the last 2 times like a big idiot. Anyhow, right. So here what we're doing. We're trying to find the bid price. Now, the bid price is simply the cost of the job plus the markup. All right. So when you are a company, sometimes same thing here, right? You are Lucas and you are responding to a request for proposal. In other words, there's a company out there that wants something done, and instead of doing it themselves, they are outsourcing it. They are looking for other companies to hire or to pay to do the job for them. But the company who wants to get this thing done and hire the other company is now asking, hey, what are your costs? So you have 15 companies, everybody sending what you call a sealed bid, sealed bid, and we'll open it and we'll see who has the best cost or the best proposal, because sometimes the lowest cost is not always the best proposal, guys. Remember, as the saying goes, cheap thing no good and good thing no cheap, all right? Although every now and again, you get lucky and you find something that fits that bill, or something really good that is very affordable, you know? Anyhow, so this is what I want you guys to do, right? So let's start off. So just acknowledge, what are we doing? We are trying to determine the bid, right? The bid price. And the bid price is the total cost of production plus the markup, right? And as we know, you have 3 components of cost. You have direct materials, direct labor, and you have overheads. So we have no calculation to do per se to find out the direct materials and direct labor. The only calculation we really have to do has to do with the overheads. As we could see down here, we have these overheads, these 4 items. You don't have to worry about this stuff across here. That'll come into play next week with activity-based costing, right? And they told us here that the company traditionally applies overheads on machine hours. So what we're going to do is we have to find the total overhead cost by adding up all 4 items and then dividing by the identified basis or cost driver to find the overhead rate. Oh, sorry, not that one. Wow, I was real misleading you all there. Right, this one down here, sorry about that. So you're gonna add up all of these, divide by the 200 and get the rate, the overall rate. Because sorry, yeah, this 2400 here is the machine hours specific to product 427, right? So that'll be what you multiply the rate by to get the overheads applied. And you're gonna add up the 50, 35, and what you get for the overheads, you're gonna get the total cost incurred. And then you're gonna find 15% of that cost as the markup and add it onto the cost. All right, okay, so we are 10:21 now, so I'm gonna give you guys about 8-9 minutes to as a bit of a head start. So that's it. Now, of course, if you have any questions, if you missed any part of the explanation, if anything didn't make any sense, let me know. It's not a problem. I know sometimes I end up babbling and losing my own self, right? Especially if I didn't get if my sleep wasn't that good, which it has not been for the past 2 years and change. But anyhow, yeah, if so go ahead, we're doing that. So head up Lucas Limited, you're heading up, you can put determination of bid price or calculation of bid price, right? And same thing. So direct materials, direct labor plus overheads. Now you could do all your calculations in one table, in one statement, or you can do a separate calculation for the calculation of the overhead rate, and then you could show the applying the rate to the number of machine hours in the calculation of costs, and right, and so forth. Can I repeat these? Repeat what specifically? That'll help me to help you. I'm not sure specifically what you're trying to get me to repeat. All right. So just one more time. So again, we're trying to find the total cost of this job. You have 3 components of cost: direct materials, direct labor. So you're heading up Lucas Limited, calculation of bid price of job 427 or product 427. Right? So direct materials plus direct labor plus overheads. Find the overheads applied. You have to add up all your overhead costs and divide by the number of machine hours. Why machine hours? Because they said here that traditionally the company uses a predetermined overhead rate based on machine hours. Okay, here, well, I'm browsing over there, so I hope you catch it the second time. Right. So after you take the total of these and divide by this, right, you're going to look for how many machine hours the job used and multiply that rate by 2400. And you're going to add up those three things, right? Is this math? No, this is accounts. Yeah, keep accounting. Yeah. And after you find that total for total cost, you're going to find 15% of it and add it onto that cost. All right. Okay, cool. So you'll go ahead. All right. While you're doing that, there was something I wanted to do real quick. No, it wasn't this. Keep accounts. That's correct. Yes. Right, no, sorry guys. So my dog's barking and I saw my dad outside and he neighbor was asking him something. Somebody new moved in across the road and so I wasn't sure what was going on. I will message and ask. Right. Okay. I just giving you a bit of a heads up, yeah. Yeah, one sec. Yeah, we have some notes to take today, so we have a couple things to work, yes, but yeah, quite a bit of notes. One two zero 382. Let's see. That is correct. Very good. Oh, that's why it was zoomed out too much. I couldn't see what was going on. Oh, you didn't expect to get it, or you thought it was harder? It's not that bad, you know. problems in the, yeah. And of course, my Google Meet people, don't forget you could always send me pics of your work if you need me to take a look. Right. Okay. Mm-hmm. Oh, I have two. Right. Oh. Oh, thanks for sharing it. More than 5 friends. That's amazing. Thank you. Right. Okay. Yeah, so today we're talking about under and over application of overheads. We have a little T account to show some stuff going on there. Right. Yeah, and then we apply it. Yeah. Okay. Okay. Good. I wonder if that will change now that we have AI, boy. That would be an interesting part of the conversation. Because as you all know, AI is a very, very powerful tool already, and it's only going to get more powerful. So yeah, we some of these quote unquote problems that we have cropping up in accounting might be dealt with because the complaint was that the amount of work that I would have to go into solving the problem or to tracing the cost or to doing calculations wouldn't be worth the little extra level of accuracy. But now, if we as the human do have to do it, and if the cost is almost, I want to say almost nothing, I don't know that it is almost nothing. Sorry, I'm talking kind of up in the air here because you guys don't know what I'm talking about with respect to the problems. Although maybe you guys did this topic in school already, so you have an idea about what I'm saying. All right. Okay. Oh, I got a one pick. All right. So let me check that, and then we will correct the question and move on. Oh, hey, Kamara, how you doing? I have like 3 Kamaras now. All right. Components, of course. Good. I like the notes. Mm-hmm. Right. Right. Mm-hmm. Right. Okay. All right. What time is this session? There's a WhatsApp group. This session is 10 to 12, and the WhatsApp group is reserved for my students who are paying customers. Yeah. So you could always DM me, and we could talk about that. Okay. Right. Okay. So what I did was I actually copied and pasted the details as best I could in the Excel sheet. All right. So we want to calculate the bid price of product 247. It's 247? Is it? 427, right? I know it wasn't 247. Right. So like I said, there are 3 components of cost. There are direct materials, 50,000. There is direct labor, which is 35,000. And there is overheads. Now to find the overheads, we have to find an overhead rate, which is what is down here. The POHR is the predetermined overhead rate, sometimes also called the OAR, the overhead application rate. Right? So what we do there is we have to add up all the overhead items. I'm a little confused. Why? Hold on. Let me just check something. Oh, okay. But then why I have... Oh, okay. All right. Small thing. All right. So what we're going to... Okay, let me actually put in a couple extra lines here. Right. So we have the 1, 2, 3, 4. No, I'll need a total. And then I'll need to divide. Yeah. Okay, cool. So let's do that. Right. So we have inspection, which is 430. Then we have... Oh, no, that's an extra 0. Right, so always, yeah, folks, always pay attention to your calculations. Ordering 80,000, and we have power, which is 480,000. Then we have maintenance. No, wait, where I get 480 from? 780. What's going on with me, boy? 780, Christopher. Thank you. Right, maintenance 350. Right, we're gonna add all those together. Now, last year I actually put that in one line, right? That so you can do that to save some time, to be honest, right? And then an exam saving time is kind of part of the name of the game, right? And we're dividing by machine hours, right? Which is down here, 200,000. Equals, right, so this here, that is your POHR or your OAR. Right, and we're going to use that in conjunction with the 2400 machine hours for job 2427. Right, so the machine hours is 2400, MH is machine hours. I'm going to multiply that by $8.20 per machine hour. Right, 19,680. Cool. Thereafter, we're going to add up those items there. So this would be the total cost of job 427, right? So total cost of job 427. Now, remember, if you are bidding, you are offering your services to provide these things, you have to tack onto that your profit, right? So the bid price is basically your selling price, right? So good morning, Ms. Rodriguez, how are you doing? Right, and from that, we're going to have to add the markup. Oops, markup, which is 15% of the same 104,680. Right, so equal to 0.15 multiplied by this. Right, and we add those two things together, and we have 120,382. Right, and this is the bid price for job 427. Cool. All right. Okay. So, ladies and gents, if you guys are good with that, just kindly give me a G in the chat. If you need me to re-explain anything, give me an R. And if you could let me know specifically what you want me to re-explain, that'd be great. All right. Oh, who's that? Oh, here's Jonika. All right. Hey, morning, Jonika. How you doing?
Morning, I'm okay.
All right, good to have you.
Sorry for being late.
Yeah, no worries, no worries. It's all right. So we did one question so far. We did a recap of last week. We just did one question. This is a 2019 job costing question. All right. Well, you're kind of on time technically for the new stuff because we're going to be talking about some journal entries and the flow of costs and these things. So, all right, you could always watch over the first, the first 30 minutes, 37 minutes of class. Anyhow, all right, cool. All right, now let's double check my G's. 1, 2, 3, 4, 5, 6, 7, 8. Okay, so 8 out of 13. All right. All right, so the next 5 had to let me know what's going on some way, somehow. Again, don't forget you could always WhatsApp me directly, right? So nobody else had to see what's going on. Right. Cool. All right. Lovely, lovely. All right, folks. Right. Right. So let me just pull up your syllabus real quick because I want to show you what we're going to be talking about today. Oh wait, sorry, hold on. Let me actually just send a picture of this in the chat. So if anybody still has to copy down, now I probably will be sending like a PDF with everything at the end of class. Wait, where did I put it? Oh. All right. So yeah, that looks good to me. Crop out the little edges there. Yeah. All right. Cool. You can check that. Okay. Cool. Lovely. All right. So, like I was saying today, folks, we have some notes to take. We're going to talk about the. Oh, sorry. I pulled up the syllabus to kind of show you what I wanted to talk about. All right. Just give me a couple of seconds. Let me just pull up that. Go down to Unit 2, costing systems. There you go. We're going to zoom in, so because of course we can't hardly strain the eyes that much. Right. All right. Job costing. This content relates to specific objectives 2 to 5. Allocate materials, labor, and overhead costs to specific jobs. So we just kind of did that in that question there. Job cost sheet. A job cost sheet has no specific format. Different entities have different formats or different layouts. Again, what is important is the presentation of the direct materials cost, direct labor cost, and the overhead cost, right? Calculate the value of work in progress and compute over and under absorbed overhead. So we're going to talk about those things today. And here, flow of costs, including journal entries. That, right? So that's what we're going to talk about as well. So that is actually the next little heading and subnote, right? ABC. So ABC is basically, like I said, job costing on, well, plus, where we have multiple overhead rates. Process costing will be from the, not next week, but the week after. So we'll still be in January for process costing. Well, to start it, all right? And then marginal and absorption costing might be a little toward the end of February, early March. We have to discuss early March, that's specifically March 1st, because that is Carnival Saturday. So again, I know some of y'all might be fetting and some of y'all won't. I probably will not be. Yeah, I don't have them resources right now. Time or energy or money. And I'm okay with that. I'm okay. I had my days for that. All right, cool. So notes 2. All right. Oh, no. So yeah, I can't just, yeah, I don't like static notes just being presented and talked through. Occasionally I might do that, but not for the majority of what I'm doing here, right? Okay. All right. So the flow of costs in a job costing environment. So again, that's what the syllabus was talking about here, right? The flow of costs, including journal entry. So what do we mean by the flow of costs, right? So let me pull up my thing here, right? So I have a note, but I actually have a diagram from a book I used when I was in UE a whole 25 years ago, right? So let me show you the flow, right? As they say, a picture paints 1,000 words. So let's go to the painting. Okay, that's a little, right? Okay, so the cost flow. So as I said earlier, and as we should know by now, there are 3 components of costs for any unit of output, any production process. You have direct materials, you have direct labor, and you have factory overhead. Now this, by the way, this will be sent in the PDF later, right? But I always encourage anybody who's watching to take notes, make it their own, right? You don't have to make art or whatever the case is and draw too fancy. Sorry, I'm not seeing a question from one of you all here in Google. Can I explain this piece here? All right, give me one sec. Activity cost. $15,260. Yeah, this looks like they're doing the cost in for the same 427 in activity-based costing. All right, guys, give me one second. Let me see if I could answer this. Right. So this looks like they're answering part C, to be honest, right? Let me see if I just have that real quick. 2024 version. Right, 2019. Yeah, look, 315, 260. That's the figure you're talking about there, right? That's the one you circle in the picture. Yeah. So this was using activity-based costing as opposed to regular job costing, right? So what we answered was part B, and what you have here in your picture, this is part C to the question. All right, so I hope that helps clear up that question. Right. Yeah, no problem. Happy to help. Right. So like I was saying, yeah, so you guys could take as much notes, you could take your screenshots, but I do encourage you to write over the notes or to draw the diagrams to help it kind of sink into your brain, right? So like I was saying, we have three components of cost in any costing environment: direct materials, direct labor, and factory overhead. Yes, we may have other direct costs, but we'll ignore those for now, right? So all of these costs flow into work in process. As we know, work in process are the units of output while they're in the process of being converted from raw materials to finished units, right? Because there's a process. We don't just magically wave a wand like we in Hogwarts and things get automatically made, right? We don't have any spells for that. So there's a process that is involved in creating finished units of output from raw materials. We convert them, right? So the labor and the materials convert labor and overheads, convert materials into finished goods by going through a process, right? Now, after we've accumulated a sufficient quantity of costs, and more importantly, finished the items, those costs are then transferred from work in process to finished goods, right? And then when they're in finished goods, two things can happen. You either sell them, which means they'll go to the income statement via the cost of goods sold section. And if they're not sold at the end of the period, they end up on the balance sheet in the closing stock, in the stock account, right? So stock of finished goods. So like if you think back to your manufacturing account questions, where you have like three sets of inventory. You have raw materials inventory, work in process inventory, and finished goods inventory, right? So that's what that is referring to, right? So the units on hand of finished goods, the closing inventory of finished goods, right? So this is the general cost flow. I'm gonna zoom out a little bit because what I want to do is I do want to send a picture of this in the chat, and then I'll send the I'm gonna scroll on because there's another piece here. So that is that piece. Let's get the general cost flow. Right, so that's the cost flow. Right, and then, so that's general, and this is specific, right? So this, as you could see, those little orange things are T accounts. So what we're seeing here is the debits and credits related to this thing, right? So as we saw, we have materials. So wages payable, of course, is payable. Wages are payable to labor, and then you have factory overheads, right? Now, when you buy materials, so, and of course I do have a whole page here with journal entries for debits and credits and these sorts of things. Maybe I could, should I show those together? No, let me show them separately first, right? So when you buy or you spend money on, well, anything, but let's say materials specifically in this case, you'll debit what you're spending the money on, materials, and you'll credit cash or bank. Or you might have to credit accounts payable, depending on whether you paid for it or not. But long story short, the balance in the materials account is on the debit side. Now, when you're using the materials, they obviously have to be transferred out. The transferring out, of course, will happen from the credit side of the materials account. Now, you're seeing two items on the credit side here. One goes to direct materials. One goes to work in process. So direct materials to work in process. All right. And then the other one will be indirect materials, which will go to overheads. Because remember, overheads are also what we call also known as indirect costs, right? So from this one materials account, which has a debit balance to show the value of materials purchased, or at least in our possession, right? We send the value of materials to work in process, in which case that's direct materials, or to overheads, in which case that's indirect materials, right? So one materials account contains both direct and indirect, and depending on where they send to determines whether they are not direct or indirect, right? Now, wages payable, same thing. You'll accumulate the wages cost here, as in you'll pay your workers. But then those costs have to be applied to units of output. If it's direct labor, it goes straight to work in process. If it's indirect labor, it will go to overheads. As you can see, the costs were accumulated in each account on the debit side, and transferred out from the credit side. And of course, when you credit this account, you have to debit somewhere else, right? Basic double entry. So when you credit here, it goes to the debit of overheads and it goes to the debit of work in process. All right. And as you can see for overheads, the costs were also accumulated on the debit side, right? Indirect materials, indirect labor, and of course you have other things like rent and rates, factory maintenance, whatever. You have a whole slew of costs there, which we should be at least somewhat familiar with by now, hopefully, right? And then we apply. Please note the use of the word applied overhead, right? And we use the word applied because that's what we did here, right? We calculated a rate, right? The overhead application rate, and then we multiplied it by the volume of the cost driver or the application base for that job, right? So we applied overheads based on the rate of, so the overhead rate and the actual quantity of the cost driver, right? So what happens here is that overheads, the value is taken out and sent to work in process, right? And again, so after your costs are accumulated on the debit side, and you can see there's a bit of a consistent theme. Costs are accumulated here, right? When they're paid for or transferred to that side, and then they're transferred out from the credit side. So in this case, they'll go to finished goods, and when you sell those, they'll go to cost of goods sold. And again, the costs were accumulated on the debit side, and when you're transferring out, you go on the credit side to transfer it out, and they go to the debit of some other account. All right. So as you can see, it's a kind of left to right flow. And it's always accumulate on the debit side, transfer out on the credit side, right? Going left to right. Okay. And as you could see, right, what I'm showing you here, basically just showing you the T account version to this diagram here. So I'm going to send this in the chat as well. Oh, okay. What happened here now? Sorry. Good. Like I dropped my phone one too many times, boy. All right. It does these strange things. Okay, right. So that's the flow of costs. Okay. So I'm going to ask if you're good. Now, when I'm asking, I'm not asking you if you could close your eyes and write this over right now. I'm just asking, were you able to follow the explanation and you understand what's going on? Right. So just give me a quick Genie chat if you guys are good with that. If you need me to re-explain anything, that's not a problem. But if you want me to re-explain something, if you could ask a specific question to guide my explanation, that would be great. Right. So that way I know that I'm answering the question. Well, first of all, I'll know the question and then be able to answer it. All right, cool. All right. Okay, so I got 9 out of 14 people, so that's still 5 people not saying anything, so maybe they're away from keyboard or whatever the case is. All right, so now we have some notes. All right, so those notes are basically going to just kind of, and it's not many. I have 1, 2, 3, 4, 5, 6 lines, I guess you could say. All right, hey Timmy, what vibes? All right, so as we could see from the previous page, right, each component of costs has its own T account. Sorry. Does this go here then? It's kind of in the way there. All right, small thing. Vibe with Leona. Good morning, blessings. Yeah, man. Thanks very much. Right, so each component of cost apparently. So direct materials, direct labor, and overhead, right? So each component has its own T account. We just saw that, right? With the exception that, right, so overheads often has multiple components, but they are all compiled into one overhead account, right? Overhead account, right? So when you see OH, Now, some people like to put O/H. I just save myself a little bit of time by not putting the slash, right? Into one overhead account, right? And as you could see, or as you could have seen, that's what we're talking about the debits, the overhead account there, right? Right. So as work takes place on a job or on jobs, right, costs are incurred. And that makes sense, right? When a worker goes and starts to do work on the materials, you're incurring direct labor, right? And of course, as they do their work, they're probably going to cause some overheads to be incurred as well. Timmy, you know Kidan? Oh yeah, okay, cool. All right, costs are incurred, right? This in turn, is recorded in the T accounts via debits to the appropriate accounts. All right, so either materials, labor, overhead. Right, and that's what we were seeing here. Right, when work takes place, you'll incur those costs, and then those costs will be transferred. Right. Hold on. This now. Hold on. All right. These costs are then transferred to the work in process account as they are incurred. Right, so when you incur the costs, let me just make sure I say the right thing here. You incur any costs, so therefore, when you pay your workers, you'll debit labor, or debit direct labor, or wages, whatever the case is, and you'll credit cash or bank. Right, cool. And then when those costs are applied to jobs, you'll debit the work in process and credit that. Yeah, okay, cool. So when the costs, right, are transfer work in process as they are applied to jobs, specific units of output, I.E. jobs. Cool. All right, lovely. Thereafter, when work on a job is completed, right, the costs, costs are then transferred from work in process to the finished goods account, right, where the costs stay until the job is sold. Right? Thereafter, thank you. Yeah. Good job. Thanks for that. I appreciate it very much. Right, I'll give you a quick story when I finish this last little paragraph here, right? When the job is sold, right? Job is sold, we transfer the appropriate, I always start with that word, I don't know why, amount of costs out, from the finished goods account to the to the cost of goods sold account. Yeah, right. So that's what we saw on the page here. All right. So I'll send this in the chat as well. And so all I have going on here is the so remember how I said a picture paints 1,000 words, right? Well, this is the 1,000 words. I mean, there's nowhere near 1,000 words, I'm pretty sure, right? Maybe a couple. I don't think there's a couple hundred. No, go away, right? All right, so all this is, these are the words that kind of talk through what we saw on the previous page. All right, so after this now, we actually have to talk about, Oh, sorry, not talk about. I'll show you. I'll kind of give you the journal. We'll go back to the diagram, and we will show the journal entries in conjunction with the diagram. Okay. Do I have any more water? I do. Okay. Drink some. I'll give you a minute or two again to finish copying that stuff down. Of course, if you have any questions, please feel free to let me know. Give me 1 sec. Oh, why is that off? That's weird. Hey, Victor, what vibes? I think something Fast and Furious noise. Oh man, what was his name again? Right, that was his name. Burp? Okay. Right. Okay, cool. So I hope that was enough time to copy it down. Again, hold on, what is this? Right, good. Lovely. Yeah, so what we want to do now is, again, just kind of talk through some journal entries to go with this, right? And when I say talk through, I have them here, and I will send them to you both via WhatsApp, via little pictures, and I'm going to make a PDF with everything we did today and send it to you as per usual. Okay, so I need to get a, right, so we're going to put this on top, put this one below, get rid of those things. All right, so this one, journal entries. Maybe I'll left and right, maybe better. Left and right, I wonder why. Because on the top here, we can't really see that stuff as well. Can we? Hold on. Yeah, man, I think we're okay there. Okay, so right, so this debit here. So when you pay for raw materials, when you buy the raw materials, as you can see, you're going to debit the raw materials, and of course, you'll also credit cash book, right? Cash book or accounts payable, right? So if it is you bought them on credit, you'll credit accounts payable, right? So that's the purchase. So again, this is just me talking through the literal debits and credits here to show you the actual notes I'm going to send to y'all. It's not new per se. It's just one extra layer of explanation, right? All right, and then for this one now, right? So that's that one. So for the wages now, right? Again, so when your workers work, you have to debit. Well, I don't know why it's wages payable, but it should just say wages expense. Anyhow, so because payable implies that it's a liability and has a whole different story, so we won't worry about that. So just imagine wages, right? So you debit your wages expense account and you credit cash book, or actually accounts payable, wages payable, right? So that's that piece there. That's that debit there, and these are where the credits will go to, right? Now your overheads, right? So with overheads, right, we have this one here refers to these two down here, right? Overheads that are neither materials nor labor. So we're talking about stuff like rent and rates, maybe insurance, maintenance, anything along those lines, right? Depreciation. Well, not depreciation because we don't pay depreciation, right? That's a whole different story. But you will debit overhead expense, but the credit will be to the provision for depreciation or the accumulated depreciation account. All right. Now the other couple of ones down here, right? So same thing, right? You have your debit to overhead expense and credit to raw materials, right? So the debit to overhead, right? This one here with the credit coming from raw materials as the indirect materials, as you can see labeled here. And then we have a similar debit to overheads. You could trace to wages payable, the credit being to wages payable, right? And that is for your indirect labor. That's this one here, right? And now for your working process, right? So these three items here. So you have piece coming from raw materials, piece coming from wages expense, right? So those are credits, and you also have piece coming from overheads as the applied overhead, right? All to the debit of working process. So that's this one here. Debit working process. Now you could show these as separate, like each one you could show separately, right? But I didn't just choosing to combine them here to kind of match with these three items in one account, right? So the materials, wages, and overheads are compiled in the working process account via a debit to working process and of course a credit, an individual credit to each of the three other accounts, right? Now thereafter, when work is finished, it's no longer in process. You're going to transfer from work in process to finished goods via a debit to finished goods and a credit to work in process, as you can see here, right? Debit to finished goods and a credit to work in process. And again, as you can see, it's literally flowing from left to right. And then I think the final couple ones here, we have from cost of goods sold, it goes to, from finished goods, it goes to cost of goods sold. So your debit cost of goods sold, that's where it's going. So your debit where it's going and your credit where it's coming from, right? And then thereafter, the last thing is it'll go from, right? So you're not seeing the T account here, but you're seeing it on top of here, right? From finished goods, it will go there. Sorry, Julia. I'm trying to get back in. Hold on, sorry, Julia's saying she can't get back in. Right there, then. Let me try something. All right. Okay, let me know. Right. Yeah. Sorry. So for some reason, Julia couldn't come back in. I don't know why. That's weird. Strange. She's taking the link, so I don't know. So I just sent it to her directly. We'll see. I guess if she pops in, that's cool. If not, well, um, can I send that? I wonder, boy. Give me 1 second, guys. I just trying to make sure Julia comes back in. Desires roti, wait, as in your actual roti place, like where you based. What does it always go back to light mode? Yeah. Sorry guys. I just trying to sort out Julia here. Alright, okay. That's as much as I could do. Resend her the link and also. Or Alright, sorry guys, yeah, just pops. Right, yeah. So hopefully Julia will be on somewhere soon. Let me see. Right, Julia, if you're somewhere, let me know now. No, I'm not seeing any viewers. I'm not sure. She did say her net was given trouble. Anyway, okay, cool. Yeah, sorry guys, sorry about that little delay. Right, but yeah, we're basically to the end of that set of journal entry stuff there, which again I will send you guys pics and a PDF. Right, so yeah, so you're debiting the cost of goods sold. So the finished goods goes to cost of goods sold via the income statement. Yeah, so there is a transfer. There is a double entry transfer for that, right? There's no double entry transfer to the balance sheet because the balance sheet is not a T account. There are no debit side or credit side entries to it, right? What you will have is, remember, it's simply a trial balance is a listing of all accounts in the ledger that have a balance at the end of the period, what that balance is, as in the value, and whether it's a debit or credit balance. And a balance sheet or a statement of financial position is simply a slightly more fancy / complicated presentation of the same information in a trial balance, right? With classifications, right? So there's no debit and credit to send anything to a balance sheet or a trial balance for that matter of fact. Anyhow, okay, so that's it for the explanation for the journal entries. Again, it's kind of weird to tell you just memorize those. I don't think that should be what you're supposed to do. You're really supposed to practice questions and do a bunch of those things. But again, I'm not sure how that going to work any time we have, right? Or the time you have, I should say. But yeah, it's we, because we're in this together. All right, okay, so that's basically that piece there. What I'm going to do, so let me just see how much of this I could send piece by piece, right? All right, so I think this is the top half. Okay. Oh, sorry. Let me see. But buffering. Yeah, that's fine. That's it. Yeah, that's cool. That's cool. There is a delay. Yeah, okay, cool. Right. Okay. So she's on the YouTube, right? So yeah. So there is a bit of a delay. So like I would say this now, and you're gonna hear it like 6, 7, 8 seconds later. So any questions you have, you could always send them. I might have to backtrack a little bit, but that's all right. That's not a problem, right? We will do this. Okay, cool. Right. So now what I want to talk about now is something called, which I'll clearly have to delete these notes. Put them back in. Something here. All right. Right. So what we're going to talk about now is something called under application of overheads, right? Under or over application. So let me explain. When we accumulate overheads from raw materials, wages, and other places into the overhead account, the amount that is sent out is based on the calculation that we did here, right? We add up all the overheads, we divide by the application base, the singular application base, and we get an application rate. We then use that application rate to apply overheads, here, to the job or the unit of output. But what happens is that because we are basing the rate on the estimates and usually the actual costs are not equal to the estimates, the amount, so let me repeat that part. The actual costs incurred, the actual overheads incurred are usually not equal to the estimates. So what happens is that these are actual costs here, but what is transferred out are the applied overheads based on the estimates. The estimates are not usually equal to the actual costs. The actual costs could be higher, could be lower. They're almost never exactly equal to the estimated overheads. In some cases, they'll be pretty close, but they're never usually very equal. They're never usually equal. So what that means is that the amount being transferred out is also going to either be too much or too little. So what's going to happen is you're going to either have over-applied overheads, as in you're going to transfer out too much, or you're going to have under-applied overheads, in which case you transferred out too little. Now what that means is that if you transfer out too little, you're going to have a balance in the overhead account, right? Now, technically speaking, you're not supposed to, because the costs are supposed to be incurred by the production process and hence are supposed to be attached to units of output, to the work. So all of the costs that are incurred were incurred in the process of creating these things, and hence all of these costs should be transferred out to work in process, right? So again, that does not usually happen because of the nature of the process, the overhead application process, the calculation being based on estimates, which are usually not going to be equal to the actual overhead costs incurred, right? I'm saying all of this and I have notes, so you don't have to try to memorize or jot down anything too fast. But again, if you want to jot down notes as I talk, that's not a problem, right? Jot down the broad ideas, not word for word, unless you could write real quick, right? Anyhow, one sec. Okay, didn't work, right? Yeah, a little pain there, right? So what was I saying? Right. So if you don't apply enough, you under apply, you're going to have a balance here. And again, you shouldn't really have a balance left in the overhead account because all those costs were incurred in the process of creating the output. So all these costs should be applied here. Should be. The other situation is where you have over application, where your overhead application rate ends up transferring out too much. So what happens is that this credit here ends up being greater than all the debits. And in that case, you technically have a negative balance in the overhead account. So how you can have negative balance in the overhead account? Again, it's not really a real balance in terms of negative money. No, that's not it, right? It's only because of the nature of the calculations. Being that the OAR is an estimate and you're transferring out figures based on that estimate, which are not going to usually be equal to the actual figures, right? Now, when you have those situations existing, under application or over application, right? It means that if you under apply, your goods are under costed. And when you under cost your goods, your selling price will probably be lower than it should have been, right? So what will happen is you will get enough revenue to cover your costs and to make a bit of profit. But if you under apply too much, as in you don't attach enough costs. Remember how I gave an example earlier at the start of class that if you don't apply enough, you might end up having no profit because even though your selling price might be here, based on your cost price, you have all these other hidden or forgotten costs that now have to be covered out of your profit. And it could eat up all of your profit and you don't want that to happen, right? So if it is under applied, what we do, the easy way that we do is we actually do a transfer directly from the overhead account to the cost of goods sold account. So if there is a debit balance left here, you'll debit overheads and transfer it straight to cost of goods sold, right? Again, that's the easy way to do it. And that's the way that we have to know how to do it for keep, right? Now, if there is an over application, it means that you've overcosted your goods. You've put too much costs on your jobs. The costs have been too high. The selling prices have been too high, technically speaking, right? But you would have covered all of your costs. But the costs, you would still have a balance here that you would have to somehow deal with. And how we deal with it is that if we have a credit balance here because we've transferred out too much, right? The credit side was bigger than the debit side, so you have a credit balance. To get rid of that, you'll have to debit the account and you will credit cost of goods sold. So what that does is that it actually brings down the cost of goods sold, right? Now, most of the times, I'm kind of hesitant to say adjusting entry, but that that adjustment might actually be made straight to the income statement. All right. Now, again, we don't have too many examples of that happening in the K past paper questions, but we'll take a look. But of course, I have to give you the notes first, right? So that's just an overview, right? So once again, just to summarize, the applied overhead is not usually equal to the actual overhead incurred. You could under apply, in which case you'll send too little costs, and what will happen is you'll have a debit balance here, which will have to go to cost of goods sold. You could also over apply, which means that you will actually have too much credits and a credit balance, which you'll then have to send to cost of goods sold on the credit side there, right? So I have all those details and implications in the notes I'm going to give you now, all right? But again, I just wanted to kind of give you an overview of the notes, right? So over or under application of overheads, all right? So in applying, overheads to jobs, right? We use a predetermined overhead application rate, right, which is based on, right, which is based on estimated overheads and the estimated volume of the cost driver or application base. Right, so again, right, for the OAR, the calculation is estimated overheads divided by estimated cost driver volume. Cool, so it's estimates, right? We then attach overheads to jobs by multiplying the overhead rate by the actual volume of the cost driver or application base used by the job, right? So that particular part is, notes, right here. So you'll take these estimates, calculate your rates, and then multiply by the actual cost driver, right? So that's what that part is, right? Carisha, T, Chris, GBC, Sabrina vibes, right? Oops, how did that happen? Not even sure, right? However, as is usually the case with estimates, right? They tend to either be greater or less than the actual value of overheads incurred on the job. Right, so that should be no surprise, right? Estimates are, once again, kind of, I don't want to say guesses, but they are items that are figures that we come up with beforehand based on some sort of past information, but they are not necessarily, they are just meant to be guidelines, right? And they are often not equal to the actual value of the cost incurred, right? So that's what that sentence says, right? As such, what usually happens is that there is a balance left in the overheads account, which represents either the under application or over application of overheads to jobs. Right. Now the simple method, right, that we will use to deal with this balance is to transfer it directly to cost of goods sold account or the income statement. Right, okay. Right, so in applying overheads to jobs, we use a predetermined overhead application rate, which we know from before, right? And that is actually based on estimated overheads and the estimated cost driver volume. Right, we know that from before. We then attach overheads to jobs by multiplying the overhead rate by the actual volume of the cost driver or application base. Sorry, 1 second. Yeah. Used by the job. So we saw that, right? So 2,400 machine hours multiplied by the 820, right? That was the first question for the day. However, as is usually the case with estimates, they tend to be either greater than or less than the actual value of overheads incurred on the job. So they're not usually equal to the actual overheads incurred, right? Sometimes if your estimates are good and costs are relatively stable, they'll be pretty close. So the difference could be ignored, but I mean, you'll still do your journal entries to clear off the balance, right? But it shouldn't ever be the case that they're so significantly different as to cause an issue, all right? But that's the hope, right? Now, as such, what happens is that there's a balance, all right? A balance left in the overheads account, which represents either the under application or over application of overheads to job. So we mentioned that before, right? Either it'll be under applied or over applied, right? Which means there's going to be a balance in the overheads account, right? Now, the simple method that we use to deal with this is to transfer that balance, right? To transfer it directly. Sorry, I'm getting a call. Who's going to call me? Hello, good morning. Speaking, yes. How can I help? Okay, cool. Right. That is working as you'd want it to work. All right, cool. Well, let me, so Anjani, you said your name was right? Okay, I'm actually in a class right now. So what I'm going to do is I finish at about 12. So I'll call you a little after that and we can discuss a little bit more. How does that sound? Okay, cool. No problem. Okay, bye. Okay, yeah. So we'll do that just now. Right, sorry about that, guys. Yeah, so that's that piece. Right, so let me send that piece of notes one time. Right. So let's talk about the over application of overheads and what we'll do in that particular situation, right? So when overheads are over applied, right, this means that the credit entries, credit entries to transfer overheads out from the overheads account were too high or too much relative to the balance in the overheads account. Right? In other words, right? So overheads applied were greater than overheads incurred. So you applied more overheads than you actually incurred. So you applied too much, right? So what will happen is that this will leave a credit balance in the overheads account. Right. The other implication is that the work in process, finished goods, and cost of goods sold accounts are overstated or have overstated balances. All right, in other words, you've transferred too much value into those accounts and the balances in them are too high. And the word we use to describe that is that the balances are overstated. Sorry, account balances. Account balances are overstated. Right? So that's my little abbreviation to try to make it fit horizontally. All right. So the easy fix, all right, for this is to is to simply transfer the amount of the over applied amount to the cost of goods sold or income statement. Right, and how do we do that? So we're going to debit the cost of goods sold, debit the overheads account and credit either the cost of goods sold account or the income statement, income, clearly. All right, doing the above will eliminate the credit balance in the overheads account. Right, so let me just read it back to make sure I don't have any typos and it's correct, right? So when overheads are applied, so let's just get a visual for a second, right? If overheads are over applied, right? Over applied means that the credit entry here was too big relative to the debits. So what's going to happen is you're going to have a credit balance in the account. To get rid of the credit balance, you're going to have to debit. But where does the credit go, right? It will go to the cost of goods sold. Now, the more accurate treatment would be that we'd somehow have to find out how much of the over applied value should go to each of these three accounts: work in process, finished goods, and cost of goods sold. And that's what I was saying before. That can be very cumbersome, time consuming, and not really worth the time taken unless it is a significant balance. Usually the balance is not material or significant enough to warrant such an in-depth or involved treatment, right? It's usually, it is usually not significant to warrant that treatment, and hence we can just go straight to the cost of goods sold account. Ocean Boulevard, this is Cape. This is job costing, module 2 in unit 2, all right? SPEAR, yes? All right, cool, right. So that's what the notes mean, right? So you'll debit the overheads account to get rid of the credit balance or to counterbalance it, but you'll need to credit somewhere, right? In crediting cost of goods sold, right? When crediting cost of goods sold, you actually reduce the debit balance, which would make sense. Morning, Kai. Yeah, and it would make sense because if you have overcosted your goods, your debit balance is too high. So to fix that, you have to credit the account, right, to bring the balance back down. Right. Okay, so that's the notes for that piece there. Cool. So that's over application of overheads. And again, let me send that piece of notes one time. Sorry, I'm trying to crop all the edges a little bit more. Yeah, man. All right, cool. Give me 1 sec. Shasha. No vibes. Right. Okay, cool. Yeah, so that's over application of overheads. So now we're going to talk about under application, which is the notes are going to be pretty parallel, right? Of course, there will be some differences, some obvious differences, which I'll show you, or which you could probably guess. All right, then after that, I have, I'm seeing a question here, right, to kind of show you all. This is what? This is over applied. Okay, cool. And then I have one for under applied. All right, cool. And I have regional PLC. Regional is what way? I think regional is a passive question. If not, it's a textbook question, which I could find hopefully easily. Right. So let's get to those notes. Under application of overhead. Let me just check something real quick here. Yeah, I don't have enough room to put this piece there. Okay. I don't feel like I need that. Was that text box all the way across too? It was. Okay. So maybe we could go like very close, infinitesimally close. Yeah, that could work. Okay, cool. So let's go. So hopefully I had time to finish copy that stuff down. If not, sorry. Huh? Right. Okay. Yeah. No. Maybe. Okay. Let's go. So when overheads are under applied, right? This means that the credit entry to transfer overheads out from the overheads account is too low relative to the balance in the overheads account. All right, so in other words, you didn't transfer out enough costs to your work in process, and then of course cost of goods sold and finished goods, right? So in other words, right, overheads applied less than overheads incurred. Right, and what will happen is that this will leave a debit balance in the overheads account. Right. The other implication is that the work in process finished goods and cost of goods sold will all cost of goods sold, yeah, balances will all be understated. In other words, they'll all be too low, right? So again, the easy fix for this is to simply transfer the amount of by which overheads is under applied to the cost of goods sold or income statement as follows. So you'll debit, right, cost of goods sold or income statement, and you'll credit, crap, no, right, overheads account. Doing so will eliminate the debit balance in the overheads account. Right. Let me just read it back to make sure pebbles or vibes. All right. So when overheads are under applied, this means that the credit entry to transfer out overheads from the overheads account is too low relative to the balance in the overheads account. Okay. So yeah, if it's under applied, we didn't transfer out enough. So this credit entry will be too low or too small relative to the debit entries. Okay, cool. In other words, overheads applied will be less than overheads incurred. Right, we've established that. That's what under applied means. This will leave a debit balance in the overheads account. Right, so yeah, if let's say this side was 100 and this side was 90, you only transferred 90, you're still going to have $10 left on the debit side in this account. All right, cool. Right. The other implication is that work in process, finished goods, and cost of goods sold balances will all be understated. Right. So yeah, if you didn't transfer enough out from overheads, you're not going to have enough in work in process, finished goods, or cost of goods sold. So all of those balances will also be understated. Right. The easy fix for this is to simply transfer the amount by which the overheads is underapplied to the cost of goods sold or income statement as follows. You'll either debit cost of goods sold or income statement and credit the overheads account, right? And doing so will eliminate the debit balance in the overheads account, right? Once again, the more correct, sorry, where was I? Yeah, the more correct treatment is, hold on, it's to actually figure out how much of the overheads that are under applied should go to each of the three accounts, right? Now, again, that could be a very cumbersome, time and labor intensive process that could not be, it mightn't be cost effective depending on how much the value of the balance of the under or over applied balance is. Sorry, the under applied balance is. One sec. Sorry. Yeah. So because it's not going to be cost effective to try to trace all of those to each of those accounts, we just send it to cost of goods sold and call it George, right? Now, again, sorry, wow, will this come for CSEC POA? No, this is CAPE accounting. This is not CSEC POA. CSEC POA is Monday and Wednesday, 4 to 6, right? Right. Sorry. Yeah, sorry. I got sidetracked in my part. What was I saying? Right. So, yeah, that's what I was talking about earlier in class. I was saying that because of the advent and progress of AI, I'm thinking that that particular argument that it would not be as cost effective or easy to try and trace all those costs would no longer be valid because the amount of calculations and work that computers and AI can do is, well, we can't even hope to do that manually or or with our innate capabilities. I mean, maybe there are a few people who can. Who knows, right? But I'm thinking even the what you call it, the application of computer power and AI to the costing process might probably significantly improve accuracy of overheads, and I might update it on the go, right? Because I think that might have been part of the problem. How do we update this costing on the go? I mean, you're clearly going to be producing during every day, right? Every day, every week, whatever the case is. And your costs for electricity and rent and these things, some are known from beforehand and some are very stable, and some you could apply with 100% accuracy, like rent, right? Unless, of course, your landlord spring a surprise increase or decrease, or whatever the case, on you, okay? But stuff like electricity and you could monitor your meters, you could do that, right? And you could apply your own calculation because the calculation, at least in Trinidad, is known, right? Yeah, so I'm pretty sure once you identify you specifically identify each and every single problem, you probably, if you apply enough brain power to it, you can find a solution, right? So that's why I'm thinking that this particular kind of workaround or shortcut to fix under overapplied may not even be necessary going forward. But again, that might be a couple years out. So for your purposes, yeah, you're gonna have to apply this. All right. Okay. Cool. Lovely. All right. So we're almost at the end of class, there, right? So what I'm gonna do, I'm just gonna go on to another page, right? So let me actually Okay, right. So notes part 3. Oh, sorry. Right. So notes part. So I'm gonna send this one in the chat. Anime Girl 13. Boy, how you doing? Morning. Right. Over application. So now it's under applied, right? Did I not take the picture? Oh, okay. Wow. That was a bit of a delay. Yeah, I heard it. Give me one sec. Yes. Oh, no. Okay. I saw a hand go up. Okay. If you still have the question, you could ask. It's not a problem.
Press it was me.
Yeah. Okay.
All right. You say just now if the overheads were understated, that we adjust the cost of goods sold account. So if the overhead was understated, the debit side was 100 and the credit side was 90, we
Right.
would lose the difference of 10 and putting the cost of goods sold account.
Correct. So I actually have that here now. So I wanna go through it. But yeah, but you're correct. Yes, that is correct.
Okay.
All right. Yeah, guys. Okay, cool. So what I'm gonna do is let me clear out all this stuff here because, like I said, I don't like to just describe static things. All right. I have to put them in and for you all to see them going in because right. So these things I'm gonna put in. I just kind of made up kind of on the spot, right? Give me one second. Oh, okay, cool. I did it already. Lovely. Right. So this here we have a couple examples of what it would look like what Kishore was just saying about. Okay, if it was under over apply, we're just gonna send that balance there. But what does that look like? Okay, I'm gonna show you now. So as we know, with the overheads, we could have indirect materials. So that's again we're gonna make us some easy figures. So 1,000 there, right? Indirect labor. Let's put it as 2,000, right? Other overhead costs 3,000, right? Okay, so we have a total here of 6,000. Let's just say, and again, it's just being made up. There's no question I'm pulling from. There's no actual calculation going on here that I'm not showing you. It's just made up for the sake of simplicity and expedience, right? Let's just say the overhead applied to work in process was 7,500. Right? Again, it's just a figure I'm pulling out of thin air. Right? Now, if we add up 1, 2, and 3, you're going to get 6,000. So your debit side total for actual overheads is 6,000, but we've actually applied 7,500. So we've applied, so as you can see down here, applied is greater than actual. So we have an over application of overheads. So there's a balance left in the account of 7,500, of 1,500, right? So that balance is going to come down here, right? That's the over applied, right? Right? So we've applied too much. So what that means is that the costs are too high. So again, the shortcut is simply to transfer that balance to, well, like I said, the cost of goods sold or the income statement, right? Now the cost of goods sold is closed off to the income statement, so and it's the same figure that goes. So it doesn't matter if you close it off to the income statement or to the cost of goods sold section, cost of goods sold account, it's going to have the same effect and appear in the same place, right? So to get rid of a credit balance, you have to debit the account. So either it's going to go to cost of goods sold or it's going to go to income statement, right? I believe the latter is the preferred treatment, right? As in income statement, not so much the cost of goods sold, but income statement, right? Okay, cool. Right. So that's what it looks like when you over apply overheads. You apply too much relative to how much you actually incurred, resulting in a credit balance in the account, which has to be transferred out to basically close it off. All right. So that is the when you have over applied. So I'll send this in the chart. Oh, that's why. Okay, cool. All right, well, I'm not gonna worry about that too much. Right. All right. So I sent a pic because I want to scroll down because I watch any time and I still have that question. I actually want to have you do, and I have to find it. So yeah, I should have found it before class. Yeah, that would have been the better thing to have done, right? Right. So this one here for overheads account, right? So this is example of under applied overheads, right? I'm just gonna borrow same figures. Now let's say in this case the overhead applied to work in process was 5,000. Now this total here is still 6. This is 5. We're clearly going to have a balance carried down. Right, so balance carried down, so under applied, right, of 1,000. Right, and that will go to the cost of goods sold account or the income statement directly. Again, I'm recalling now that the transfer to the income statement is the preferred treatment, so we'll use that one. Right, and this is where applied, as in this figure, was less than the actual overheads incurred. All right. Send us in the chat too. All right. Okay, so we have about 10 minutes again. Let me just see if I could find regional PLC. I feel it says PLC, so that makes me think it's actually one of my textbook questions. Because PLC is Public Limited Company, but as an American abbreviation. Okay. Give me 1 sec. Yeah, go ahead. Yeah, so there's no regional PLC in the past paper, so it definitely has to be one of my questions. It's not here either. Townsend, Grand, Executive, Richard. Don't bug me. Durable goods. Santos, General, Witty. Oh, some journal and some T accounts there for y'all, but yeah, man. NICOM, Academy, like Academy, Madison Brothers, job costing in a service business. Okay, now hold on, something wrong. Regional, authentic Oxford. Okay, apparently I can't find regional. Let me go back to the thing here. Lucas. Yeah, I'm pretty sure it's not any password. Lasmoy, Peyton, we did that already. Daily, a Cooper. Oh, look, regional here. Wow. Okay, and it's kind of twisted. All right, so we're gonna have to kind of speed through this question. What we're doing is just simply calculating the OAR, and then the amount of overheads under or over applied. All right. So Regional Printing Company produces phone books for firms located throughout the Eastern Caribbean. Okay. A job order costing system is used to accumulate the costs incurred for each printing job. Okay. At the beginning of August 2009, two jobs were in process. Job 811 with a signed cost of 16,500 and job 813 with a signed cost of 4,200. So these two jobs were in process. So those figures you're talking about would be the balance in the work in process account, right? The two of them would be the balances together in the work in process account, right? The following transactions were recorded by the company during August 09. So they bought raw materials costing 69.5. When they say purchased on account, they mean they bought them on credit. So shop supplies costing 3,600 were also purchased on account. Okay, cool. Raw materials and shop supplies requisitioned during August. So requisition means we bought them here, but then we required them, we took them from the stock of those things and used them in production. So when you requisition supplies or materials, you're taking them out from the warehouse or the store and you're putting them into production. So raw materials, so job 813 and 8,500 of raw materials and shop supplies involved. So these are actual costs, 814, 815, shop supplies. Shop supplies, that's the indirect materials. That's your overheads first. That's the actual value, right? Labor hours worked during the month were 811, 813. Indirect labor, 140. And it says that each worker was paid $14 per hour. So we could work out the indirect labor cost here, right? By multiplying 140 by 14. Depreciation on shop equipment, 7,200. Other shop overhead, 9,150. All right, so they're setting us up to do an overhead calculation here, right? With indirect materials, indirect labor, depreciation, other overhead, and then shop overhead. Shop overhead was applied to printing jobs at a rate of $13.20 per direct labor hour. Ooh, okay. Jobs 811, 813, and 814 were completed and sold during the month. Okay, cool. Calculate the total shop overhead applied to jobs in August. Okay, the total shop overhead applied to jobs. So shop overhead was applied to jobs at a rate of $13.20 per direct labor hour. And what we see in here, right, are the labor hours, the direct labor hours for each job. So all you're going to do, you're going to add up these four things and multiply it by 1320. So do that quick for me, right? Add up those four items and then multiply that total by 1320. Agreed. Okay. Yeah, sound good. Right, let's do that quickly. So we're gonna go across here. So regional, right? So I kind of have the figures already put in, so we're gonna do that. Okay, no, so that's way too big. Let's go back to about 200 there. All right, so let's do that. Put that one on top. We'll put this one below, right? Right, so 410, 620, 750, 110. So 410, that's 18, 1890. Right. So you're going to multiply 1,890 by the 13.2, and we get 24,948. Right? So that there is the overheads applied in August, right? And that's what they asked us to do initially. Now, I know we only have about a minute and a half again, right? So I'm going to ask you to just bear with me for like a couple minutes thereafter, right? Now, they want to know by how much was shop overhead over or under applied during August. To know if it was under or over applied, we have to compare applied overhead to actual overhead. Now, how are we going to determine actual overhead? Well, they kind of gave it to us. They gave us the materials, they gave us the indirect labor hours, which we'll multiply by 14, and they also gave us shop equipment and other overhead. So what I want you to do is I want you to simply calculate the actual overheads incurred, right? So 33 is a plug and play figure, just pull it, right? The indirect labor, you have to multiply the hours by 14 dollars per hour, and then other shop equipment and other shop overhead. Again, just plug and play. So those four items, you compile in, adding them together, and they give me a total. And we're going to compare that total to the over applied value, right? Sorry, over applied. We're going to compare that total to the actual, the applied overhead. The applied overhead, the 24,948 we just found, right? I should take you a couple seconds to do. All right, so we have the shop supplies, which is the indirect materials, 3,300. The indirect labor, you have 140 hours by $14 per hour. So that's 14 by 14, 1960. Yeah, okay. And then we have another two plug and play figures, 7,200 and 9,150. All right, so let's put that on top, put this below. Right, so we have the 3,300, as you see in first figure there. And then we have the 140 by the 14, which is the 1960, seeing that there. And then we have the depreciation and the other shop overhead, 72 and 9150, those two figures. Adding them together gives us 21,610, which is actual overhead. And we've applied how much? 24,948. Right, so all we have to do is find the difference, right? It's neither negative nor positive. Doesn't matter which one you put, just put the difference, right? So we've shown that overhead has been over applied, right? By how much was shop overhead over or under applied? 3,338. Right, and you debit overheads that and credits income statement that, right? I'll send a picture of this in the chat too. Okay, all right, so folks, that's about it for today, right? So next week, I don't anticipate any issues in terms of having class. If anything crops up, I will let you know. Again, all my classes have already been recorded, right? So worst case scenario, I had to watch a replay, but again, I don't see any reason why that would have to happen. What is this? Yeah, so we should be on for next week, usual time. Oh, sorry, I now see in this question. Yeah, yes it does. Wow, okay, sorry. Yeah, Okay, yeah. So, ladies and gents, well, I see some of y'all jump out already because I figure you have a 12 o'clock class. So, yeah, no problem. Right, but the rest of y'all, I will send you guys a link to the replay and a PDF of everything we did today. And of course, if you have any questions and you get to ask during class, please feel free to let me know. And you should already have the PDF with the past paper questions. So if you want to try any more, you can let me know. You can send me pics, and I should have the solutions from previous years, right? And I have to double check the 2021 to 2024 papers to see if there were any more job costing questions. But next week we are definitely doing ABC, activity-based costing. That's a one session thing. So after that is process costing from the following week, which means that's the 25th of January, and that will probably go on for 2-3 sessions. And yeah, after that we'll tackle marginal and absorption costing, which again is a 2-3 session. So by early March we're in module 3, I'm thinking, right? We won't really have a chance to revise for mock. We'll be working from the past paper questions mainly, so you could use those as your revision. And yeah, we will be done the syllabus before the exam, right? And we'll have time for some revision sessions. Anyway, guys, that's about it for today. Thanks for being on time. Thanks for staying a bit longer with me. Have a good weekend, and I'll see you guys next week. Bye. All right, bye, ladies. Later.